Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an important update about the economy and the investment markets. Well, of course, we're in positive numbers for the first 3 quarters of the year for 2018. Generally speaking, I expect a little bit more volatility in the month of October as we go into December of the equity markets and certainly the bond market, and I've talked about that all year. I think the last quarter of the year overall, though, has a good chance to be positive. Corporate earnings should be at record numbers. GDP growth is solid. Unemployment looks very, very good. Housing starts and the things that contribute to that all look good. Of course, we're always concerned about, the future. So we're always looking out and what's going on. One of the major adjustments we've made in the last week or so and continue to do so is reducing our exposure to the emerging market economies. One of the reasons for that, simple. Because the emerging market economies are being somewhat impacted, especially China, given the trade talks. Again, I don't think they're trade wars, more of a trade talk and discussion. China's still playing hardball. So what's happened is emerging markets have lost a little bit of a short-term luster, and because they're slightly negative year to date, what that tells me is, generally speaking, as we get into the month of November, then we'll have tax loss selling. Relative weakness, tax loss selling, they'll probably come down even more potentially over the next month or so. We will look at potentially rebuying those, but when relative strength starts to firm up, as we get closer maybe to year-end, maybe end of December or going into January, again, tax loss selling does push equities, certain classes that have not fared as well as others, for people to sell to tax loss harvest. So again, smart money management on our part, looking out for our clients all the time. Generally speaking, world economy is doing okay, emerging markets, the U.S., Europe, we're not in Europe at all, and I don't anticipate being there anytime soon. I will say that the U.S. economy appears to be getting a little stronger, but we're always looking out in the future. We're not seeing current signs of recession, but again, that's a daily a bit of work for my team and myself to look at where the economy is headed, not where things have been. One of the big interesting things, of course, interest rates are hitting highs that we haven't seen in 7 years. Again, we're at 3.2% of the 10-year, so not real high interest rates, but certainly higher than what we saw in the last couple years. Bond investors in general are getting crushed. I will tell you, at our firm, we've already reduced or have the proper exposure either to bonds and cash and the right types of bonds that we feel will fare well in a rising interest rate environment. Unfortunately, what I will tell you is the vast majority of investors outside of Resney Wealth Management, the people that we talk to daily from the big brokerage houses, banks, and insurance companies, are grossly over allocated to bonds and the wrong kind of bonds. We continue to see this every single day. So again, we feel we're in the right areas of the bond side, we're in the right areas of the equity side. We'll make adjustments as we see fit and as necessary. But as always, if you're a client of our firm and you have any questions, please give us a call and make sure you schedule yourself a review appointment as we get towards year end if we need to sit down formally. Make sure you have yourself a safe and profitable day.